Well, welcome into a daily editorial here on the KE Report, chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Jordan, you and I were talking off mic about a number of different markets and a number of different stocks, and one thing that you outlined to me is that you are seeing some similarities, or there are some noteworthy characteristics of the market that we are in right now compared to what we saw in that 1999 to 2001 cycle. Let's start off here, and please give us your synopsis of what you're seeing similarity-wise.
Sure. Now, with respect to
at the end of the question,
precious metals and commodities, and also we can throw the stock market in there because we look at valuations, look at how well tech is doing. That's a big similarity. But basically, Corey, the mid to late 90s, we had a really nasty bear market in hard assets, in precious metals especially. And the Fed during most of that bear market rates didn't change. So they weren't cutting rates, they weren't hiking rates, which is similar to, 2012, 2013, 2014 until the very end of 2015 when they did that hike. But what's interesting is they did that hike at the very end of 2015, Corey, and then precious metals immediately bottomed a month after that. And commodities, I think, bottomed at the same time. And precious metals had a very strong move, but they've basically been gold's been sideways since the summer of 2016, whereas silver and the gold stocks have been trending lower. I mean, they haven't quite made new lows yet, but they've kind of been in somewhat of a downtrend in that time. Whereas if you look at commodities and stocks, more so stocks, but some commodities have made higher highs, even as the Fed has continued to hike rates. So as the Fed continued to hike rates, stocks did really well. Commodities did okay to well, but they outperformed precious metals, which basically just faded after that initial rebound. And that's, Corey, that's exactly what happened in that 99 to 2001 cycle. That when the Fed restarted its hikes in 1999, precious metals, commodities bottomed. But as the Fed, after their first hike, as they continued to hike rates in 99 and then into 2000, the stock market, of course, did well until the middle of 2000. It had a huge move because of the tech bubble. But commodities also were making higher highs. They made higher highs, I believe, until the very end of 2000. But precious metals basically just had this big rebound for a couple months after the first Fed hike. And as the Fed then continued to hike rates, precious metals just faded. And so that cycle didn't change until, and we've talked about this before, until the Federal Reserve stopped hiking rates. They went to a pause. And then at that point, gold started outperforming the stock market. And then when they moved from a pause to a cut, during that time, gold stocks bottomed first. Then gold bottomed after that. And so that's when that shift in Fed policy is when precious metals really started to perform. But where we are here and now, Corey, is the Fed, they're obviously going to hike rates next week, I believe is the Fed meeting, or maybe it's a little bit after that. And if you're just looking at the markets here and now, I mean, the Fed looks like it's going to be able to hike rates a couple more times this year after June. And so that doesn't really bode well for precious metals. However, and we were talking about these other markets off air, and I know we can get into them if you'd like, but if you're looking at copper, for example, I mean, that has a really strong base above $3. It could be, I know there's some fundamental developments recently. There's some supply issues, but, that is a bullish chart that's probably going to make a new high at some point. We normally don't talk about the stock market, but I mean, the U.S. stock market in the short term looks very bullish. Emerging markets had a strong correction because of the dollar, but they're starting to look better. There's other sectors within the stock market, like small caps, that have been performing very well. So when you look at those factors, it's really a repeat right now. I don't know if we're in early 2000 or we're in late 99, but we're really repeating that cycle with respect to the fact that the Fed is continuing to hiking. Stocks and commodities are where you want to be, but not precious metals, unfortunately.
Hey, Jordan, I know talking from you and reading all your releases, all your notes to subscribers is that for the precious metals, we're really waiting for the Fed to shift course, and that's something we've talked about quite regularly. I would agree with you. But yes, while we're in this situation, a number of bullish markets out there, including the U.S. equity market, something I talked about yesterday. When we see small caps and even tech leading the way, that is, well, a bullish sign and something that the bulls can kind of hang their hat on for now. But in terms of the other commodities, you mentioned copper. Yes, a very nice base above $3 and some more positive signs to move up. There's also the oil market too. If we could quickly get a comment on that, that has been very strong. Now, it's gone through a fairly significant correction in the short term, but there's still a lot of people pointing to the general uptrend that we're seeing in oil again being, in a sense, that whole commodity bounce that we are seeing, and that is, for the most part, sustaining itself, even though oil is moving down right now. Do you have a comment on that oil rebound, the nice move up, but now this little correction we're seeing?
Yeah, that's a good question, Corey. Looking at oil, I don't follow oil that much, but I know yesterday it put in a bullish hammer. I mean, today I don't think it's higher. But looking at oil, I mean, it's been a very strong trend. And if we're looking at the 200-day moving averages, basically it's $60. Oil's in the mid-60s. So oil has had a sharp correction. But if you're a believer that global stock markets are going to make new highs and the U.S. dollar is not going to have a runaway advance, then I would think at least oil is probably going to rally back and retest that high around 73. The key to watch with oil is actually the dollar, because it's been, I'm not huge on correlations, but oil has actually been more correlated to dollar weakness, much more so than gold. So that's something to watch with respect to oil. Now, the dollar, as we talked about, I believe last week, it's reached, it nearly touched 95. It came a couple ticks away, but let's just say it touched 95. And I've been talking about a confluence of very strong resistance around 96. So looking at that and looking at the fact that the dollar's overbought, it's probably not going to move above 96 anytime soon. I mean, I could be wrong, but if it's going to do so, it's most likely, that could take a couple of months of consolidation and correction here. So what I'm saying essentially is that fact that bodes well for oil to have a rebound here and recover some of these losses. I don't know how much higher oil can go, but it's interesting, Corey, because if oil can run above 73 and make a new high at some point in the next couple months and maybe get to 80, that's a point when it starts to affect the global economy and also the U.S. economy. I know we're much less energy dependent than we have been in the past, but every recession in recent times, there's basically been a huge rise in oil leading into that. So what I'm saying here is if oil is going to make another new high and run up towards 80 or even above that in the months ahead, that would be, that could be something that could bring us closer to, the Fed moving towards that pause, what we're talking about. So with respect to precious metals, that's why I'd keep a look on oil. But I mean, for here and now, the trend is higher for oil and commodities, but not precious metals.
Exactly. I totally agree with you on that one. And again, there are just a lot of other factors to consider in the world. But one other market that I've been getting a lot of comments on, that there has been some renewed bullishness. And I hate to say renewed bullishness because I feel like people have been bullish on this sector for the last 3 to 4 years, and it just hasn't done anything except for really go down, quite frankly. And that is uranium. What are your comments on uranium and also how the uranium stocks are looking technically?
Well, I'll just discuss the uranium stocks technically. And looking at the URA ETF, Corey, this is very interesting because it's been making this kind of unorthodox bottom, this unorthodox base going back to the end of 2015. It has popped a couple times out of that base, but then it's come back and lost most of those gains. But nevertheless, it has been trending higher on the basis of higher lows, you could say. Where it is here and now, what's very interesting is It's looks like it has a good shot to make a weekly close here above the low to mid 14s. This is URA, that ETF. And looking at the 200-day and the 400-day moving averages are essentially in the mid to upper 13s. They're not that high. The 400 days at 1373, but looking at the base and in the key level, Corey, this weekly close, if it can hold these gains, it's breaking above, as I said, the low to mid 14s. And so this week it has a 9% gain so far. I mean, if it can hold these gains into the close, I think that would bode well for possibly a move up to the mid 15s or even 16. And if we see just any follow through after this strength this week, I mean, that would be a very good sign. So the uranium could be at an inflection point. It could be at the start of a real bull move. I probably have said that like 2 or 3 times in the last couple of years, and it hasn't happened. But what we can say here and now is it looks like it has another chance to happen. And economically, we're in a late cycle, and that's when energy does really well. So I know people have been bullish on energy for good reason. Energy is a good value, and so if going back to our last answer, if oil is going to move up to 80, that's certainly going to benefit uranium and drive more people to put more money into the uranium stock. So this is definitely, I mean, it's a highly speculative area and industry, as you know, but technically it looks like it could be starting to break away from resistance in the low to mid 14s. So very interesting market. Definitely one you want to keep your eyes on because there's a decent chance here. Maybe it could be starting a move that does well over the next 6 to 9 months.
Hey, that means a lot to me, Jordan. If you're seeing from a technical standpoint the potential of a more sustainable up move in uranium and uranium in general, because it's been under a lot of pressure recently. But I guess we can just wrap it up with the general synopsis of what we're saying here is that commodities still might perform fairly well in this environment that we're in, but it's really select commodities and it's not the precious metals that we need to be focused on. The precious metals will get their time when we start to see the bullishness come off of the risk-on assets, when the Fed needs to slow down its rate hikes or change course in general. That's when we can see the precious metals do better, but it is encouraging when we see commodities on a broad sense do relatively well in this environment. Is that correct?
Yeah, that's exactly right, Corey. And I wouldn't just say, okay, well, uranium's rising now, let me just buy some uranium stocks, or copper looks good. There's nothing wrong with looking into those areas because the underlying metals are trending favorably, unlike precious metals. But when you're looking at companies, you still should favor companies that fundamentally are strong and they're making a discovery or they're adding value, those types of things. I mean, there's still pockets of strength within precious metals. You have to look really hard and deep, but there are some pockets of strength. I mean, you also have to look at I would say copper and in addition uranium, but I guess what I'm saying is don't just immediately throw precious metals out the window, excuse me, and say, well, now I need to look at uranium because uranium's about to go up, or I should only look at copper. I mean, what Brent Cook says is he always, he doesn't necessarily factor on the commodity. He looks at the company and sees that they have a chance at an economic depositor, that they've made a legitimate discovery. That's something I would impart on the listeners. Don't just necessarily focus on, 1 or 2 commodities. Just understand what's going on here. Understand which metals are probably going to see more inflows for the rest of the year. But at the same time, you have to look at things on a company by company basis. And look, if all things are equal, then you probably want to favor a copper or uranium company at this point over a gold company, but not necessarily. That's not going to be true in every case. So I hope that makes some sense.
Yeah, I think it does, and it just speaks to the market that we're in. You need to be very selective. There isn't money flowing in on a broad sense, but there is money that is looking for some of the good stories and some of those companies that continue to build their projects out. There are still a number of good stories that have money, that have some solid plans, I think, for the next couple of years moving forward. A little bit of help from the underlying commodities price would be greatly appreciated, but still, these prices, you need to remember, for commodities are not falling. So find those good companies and just build your portfolio with a slightly longer term outlook. Jordan, great chatting with you as always. Have a great rest of your week.